$1.50. So, David, these have been frustrating times for us precious metals people, haven't they?
Absolutely. In fact, silver is spot price hitting a 6-month low as we speak. So if you've been waiting for the pullback to trigger either add your position or begin one, now might be a good time to start. The reason I say start, of course, this is, a lot of people out there have already bought, but, 6-month low. And the reason I wouldn't say this is it is because it could go lower. In fact, pretty good analyst, and I don't pay a lot of attention to other people's analytical work. I like to just kind of tunnel vision it and do myself so I get influenced too much. But regardless, this particular individual said that there would be a new low in silver before we started back up. I know that we really double bottomed. Now, gold has put in its low in December of 2015, and that's held. And silver did the same, and it's held, but barely. But anyway, we'll wait and see. It has been trying. I mean, to elaborate a little bit more, recently we're at like an 89-to-1 gold to silver ratio, which is really high. It's been as high as 100 a couple times, but both times it's hit that. It's been a spike situation, come right off. But we've been up in, this area for a while.
Mm-hmm.
So certainly lots of unhappy silver investors, let's say, and some pretty discouraged gold investors as well.
Yeah, well, nothing new there. It's been that way for quite a while here, David, and so you wonder, I mean, all of the weak money is out. Only the diehards are left. You wonder how much longer this can go on.
Well, absolutely. And I just, I've been wrong. I mean, I've said it several times, and I'm not afraid of it. It's like this number one thing I say. But me and many, many, many others, that we would be in a situation where after the 2008 crisis and the bottom in that intermediate bottom in gold and silver has hit about 9, gold, I forget the number, but they just both rocketed up from that point, and silver went from basically the $9 level all the way up to almost 50. And gold did a similar path, but not quite as much in percentage terms. And then we've been doing nothing. We did nothing but go basically sideways for the last several years. We had actually 2016 was kind of a recovery year, but it didn't follow through. So we've been in these wide trading ranges, and people, I coined the term, these markets, and I was referring to silver specifically, either scare you out or wear you out. And I think the silver market particularly has worn people out. They've left, they've gone to the cryptocurrency, they've gone back to the stock market, they've gotten the real estate, they've, or options traders or whatever. I mean, a lot of people left. And the reason I know that is not only anecdotal evidence from, doing the money shows and resource conferences and everything else I do, but talking to the main dealers, many of the dealers. In fact, one we're friends with and recommend him is Miles Franklin, and speaking with Andy recently, and I forget how many months back, but not that many, said it was the first time in years that they were net buyers over net sellers. Most people, especially gold, will buy and hold and really never sell it back, or seldom do. Some do, all obviously, but so the net's always, for them as a dealer, always more being thrown out the door than coming into the door. But that wasn't true here a while back. More and more people just giving up, throwing in the towel. Here, how do I ship my silver back to you? Oh, I did this. I'll print the label and send it back. So
giving up.
So there's that. I would like to mention, I'm writing a Morgan report right now to mention pre-show, and I don't want to harp on this, but my opening thoughts on this month were it's so much is happening so quickly, it's difficult to get to the quote-unquote meat for our members and cover the most important issues relating to the financial markets. U.S. stocks fell for the 5th straight week, which is the longest weekly losing streak since 2011. Since our main thesis is that gold and silver move opposite the stock market more so than the dollar, we're hesitant to say the summer months will be dull for the metals. As always, as the markets provide more insights, we'll update with our videos for all premium and mastermind members. Bo Pony was interviewed by Greg Hunter of USA Watchdog, and I've got nothing against anybody. I mean, he's made his calls. He's been wrong. I've made mine. I've been wrong.
Haven't we all?
He's certainly got the guts. I mean, he's not only, I usually give it in general terms. But anyway, so I go on. Bo insisted that the U.S. stock markets will be in a major downturn in June with follow-through in July and into the remainder of the year. I've known Bo since he spoke at the Silver Summit a few years ago, and he's known for outrageous predictions. However, the stock market is overextended, and it's absolutely due for a correction. With the financial news filled with trade war commentary and how China may hold out the rare earth element market as leverage against the U.S., things certainly are becoming more uncertain. Stay alert. We could be entering the long-held statement that precious metals are going to regain their strength. So that's the first two paragraphs of this month's report. Pre-publication, it goes out this month, but we said, might warm up our discussion with that. So there's that. If Bo's right, and we start a downturn in the market, these equity investors that are making so much money now will start losing money, and they will start to look at where's the safe haven. Bonds somewhat, but bonds and stocks move together now. They're really not negatively correlated anymore. So really the run to gold will start. And so if the market gets a major correction, or let's 20% or more, which we saw in December of last year, you'll see the run to gold. In fact, I'm going to keep talking. We had that move down, which was like the worst December since the Great Depression of last year, December.
Right. Sure.
We got about a 20% correction. What happened? Well, we had a huge move up in January for gold. And then what happened? Well, whatever, the algorithms, the plunge protection team, or the market itself, I'll allow that, came back strongly. And what happened? Gold started selling off again. So that's sort of a mini picture of what will happen in the future.
Yep, for sure. I have no doubt it's going to happen at some point, but we've been talking a long time already, and it just ain't happening, right? So something's gonna force it to happen, though. A catalyst, some type of event, and we just don't know what that's going to be.
Oh, correct. I mean, I think it could be this trade war thing. It could be the real world war, which we're not pulling back. I mean, the same with Iran. It's rather upsetting to me personally, but I don't run the world. But anyway, you've got more trouble in the Middle East. You've got this issue that the mainstream press is making a big deal about, and it is in a way. This trade war thing isn't lightweight situation. You got a lot of factors. I'm very fond of overusing so many black swans flying around that one's going to whack into the other one, and two hit, and then away we go. And that isn't a bad metaphor. I really think that fundamentally, I mean, anyone that's open-minded, studied monetary history, even at a cursory level, understands all fiats fail, has to look at the fundamental facts right now and say there couldn't be a more important time to own the metals. And, again, sounding maybe defensive, Kerry, but you know me quite well. Look, 10% is probably enough for most people. 20 is what I advocate, but you don't have to put the farm into the metals. You just but you must, in my view, my personal view, you must have some. So with that in mind, if you bought at $1,900 gold and you bought your 10%, and that's all you did, you still be sleeping pretty good at night because it only represents 10% of your total holdings. But if you bought, 80% of your holdings in precious metals at 1,900, gold, you're not a very happy camper, right?
No, you're going to be, you're feeling a world of hurt, and you're thinking that it's never going to go up again, right? Really are believing that. So kind of a shame, but that's the way markets work. Was it Keynes who said that markets can stay irrational longer than you can stay solvent?
That's perfectly correct. Yeah, and it's so true.
Yeah. And it's a perfect example of that, which I guess is why you shouldn't bet against the market, but having a portfolio that consists of some disfavored assets is certainly not a bad idea.
Well, I don't think there's anything out there that's cheaper than silver. I mean, if you look at the inflation-adjusted price on almost anything, silver is probably the biggest laggard out there. And as I said at the beginning, it's at a 6-month low right now. And, it's very interesting. In fact, this month in the report, which I haven't put into it yet, we're going to review the World Silver Survey and the CPM Silver Yearbook and do what we do every year. Every year we do this in this issue, either the May or June issue of the Morgan Report, and look at these two studies and kind of go through them at a pretty good overview and talk about supply and demand and da-da-da-da. Well, there's really been the very, as I said earlier, huge fall off in investment demand in the silver market, and that's what's taken it
very true,
to the level it's at now. Most people, well, it's manipulated. Yes, it is manipulated. Yes, it is. But it's a lot easier to manipulate a weak market to the downside than to manipulate a strong market to the downside. Let me tell you.
Very true. Yeah, that's a great point. So yeah, it's manipulated, but they manipulated it exactly the right moment, right? That really drives it down to its lowest, and they have the timing down. Let's face it. So a fundamentally weaker market, easier to drive down, like you said, than a strong market. If demand was surging, whoever was trying to manipulate it would probably step aside and let it go higher till it got to a weak technical moment and then strike again, right? Isn't that kind of the MO?
Well said. That's exactly what they do. I mean, if you go back to, when things are going our way, or if you're long and silver was making those new highs, the big players stepped aside. If you check what the commitment of traders reports look like, basically JP Morgan and some of the other banks just left it alone and let it run. Yeah. And then it's like throwing a tennis ball or a baseball or a softball or a rock into the air. Yeah. It goes up and up and up, but as it goes higher and higher, it starts to lose momentum. And then it gets to the apex where it's static. It's not, going up or down, and that's a rest point that's momentary, and then it starts down. So these banks basically let it run its course. Well, as it was going up and up and up, what was happening was the physical market demand was starting to get strong enough where they're starting to get worried. So what do? Well, they came in and started changing the margin requirements. And if I recall correctly, it's 4, maybe even 5 times.
Yes.
And once that change in the market, which they're allowed to do, took hold, then, of course, it stopped that rock and forced it the other direction. Got to remember, silver actually traded after the fall from 50-ish level around 30 for almost a year. So, I mean, in order to get physical silver into your hands for industry, you had to pay somewhere around the $30 an ounce level. And it wasn't like a one-day event.
Yeah.
It lasted about a year. Same thing, we talked about $50 silver twice. And one thing, I've said this in other interviews, haven't done it in quite some time, is, $50 silver, $50. What people don't think about too often is that $50 silver in 1980 was a one-day
Very
event.
True.
But if you look at the average price of silver for that year, it was $20.
Yeah.
So if you bought silver, let's say at $6 in January of 1979 and didn't catch the peak and were bullish, and then it just fell off, and the rules changed to where you could only sell silver, you couldn't buy it, and on it went. But you're looking at, $20 silver throughout the rest of the year. You still had better than a 300% gain, no real effort to sell it at 20. I mean, you had a year to sell at that level. So
correct. Yeah. Yeah. It's people don't necessarily look at it that way, but yeah, they hit $50, but that was, like you said, for one day. And, then it was all down from there. So yeah, interesting interesting market gyrations. I just wonder what it's going to take. And, somebody, a listener sent me a question saying, well, why don't they make silver a tier 1 asset, by the, we're talking about Basel Accord and the Bank for International Settlements. And I just don't think that's ever going to happen again.
No, I mean, this is my take, but I'm pretty well studied in the silver market, not only from, current days, but, past history. This is, again, my take. I think I could prove it pretty easily. Probably have to take a book to do it, but it's my strong understanding that particularly the London banks wanted silver out of the monetary system for a very long time. Mm-hmm. And I'm talking a very long time. That's what the crime of 1873 is about. That's what the book, The Wizard of Oz, is really all about. Yeah. It's a big metaphor for the Eastern establishment. It's much easier to control one metal than two. And if the banks could get silver out of the monetary system and keep it out, which they've done, then all they really have to focus on is the gold market, which is what they have done. And so I'm convinced myself personally that silver was absolutely taken out of the monetary system for their benefit, not our benefit.
Yes.
And if you look at what it did to the people, just look at the opium wars in China and how it devastated them. Look at, the Cross of Gold speech from William Jennings Bryan and what happened when they took it out of the monetary system here in the U.S., what it did to, the farmers, the ranchers, and the merchants and everything else in the Western U.S. And it's not a pretty picture, but it's absolutely, again, I'll keep using the word absolute, but there's a strong case that this is deliberate and they don't want anything to do with it. Mm-hmm. In fact, I'm going to digress a little bit. This is an interesting story. I've never told this one, Kerry, but I had a fund manager that managed a fairly significant amount of money, and he got a hold of me. This is years and years ago. And he really wanted to do a white paper on why, basically cornering the silver market was like the smartest thing that anyone could do, because it really is a strategic metal. It's needed in so many products, communications, phones, everything that we all know about. Plus, so he wanted to basically have me commission me to write kind of a white paper on that, or he wanted or collaborate. And we never did it. I never really, had another conversation with him. But he really, really did get the silver market. And I really had a long talk with him on that one call. Mm-hmm. And he really did understand how much more vital it is and how much easier it would be. Because, the cost, I mean, you've got right now you got 2 billion ounces of silver above ground, roughly speaking. Right. So if you take the coin market and discount it, and the reason I discount the coin market is it's small holders, basically. I mean, there aren't any major banks holding massive amounts of silver coins. So you got 1.5 billion ounces of coin. So you got about 1 billion ounces in bars. Mm-hmm. That's what? $14 billion. I mean, to me, 14 is a huge number to use. It's a huge number, but to what's for a market there in the financial markets, it's such a small number. It's pathetically small. And that's all it would take. And game over. Now, I don't think it'd ever happen, but it's nice to fantasize about it, at least for somebody that sees the, I'll call it the shenanigans that are going on in the financial system day after day, week after week, month after month, and year after year that absolutely is detrimental to the average human being. It's really, really upsetting to me.
Oh, yeah. Yeah, I don't think of all of those, all of the mining, the economies that rely upon mining. This has been, the current economic system really penalizes resource investing and prudent business investing, upgrading mines, opening new mines, besides all the regulatory and legal stuff and everything else that you have to go through. It's really done a number on it. Really has.
Yeah, when silver was at that $30 level in 2011, I thought that might hold. I wasn't sure. I wish, having 2020 hindsight, you can always be eloquent, but
Yeah.
that was a price level where all these mines were actually having not an exorbitant profit, but a good profit, steady.
Yeah.
They could explore. They could, pay all their bills. They could pay down their debt. They could pay back the banks, et cetera, et cetera. And I thought, maybe this is, maybe we're at a point where, that would take place. And of course, I was wrong again because these banksters love to make money in both directions, particularly in silver. I mean, it's almost like they have a vengeance against it from way back in, like I said, the 1800s.
Historic.
We hate silver. It's not money, and we're going to penalize anyone that thinks that it is, And I know that sounds very defensive, and maybe it is. But nonetheless, the facts speak for themselves as far as looking at the price. Price over time.
David, when you look at Commitment of Traders report, the COT, and you look, the commercials are always right, and the speculators are always wrong, with a few minor exceptions along the way. And it makes you wonder, who are these stupid speculators that keep throwing their money away? They just want to lose money. Who are these people, right?
Yeah, I've thought about that at times, and I've actually had a conversation with Ted Butler about it. And again, this sounds kind of on the conspiratorial side, but you have to ask that question. It's like, wait a minute. So I wouldn't rule this out. I'm not saying this is what takes place. So let me be clear. Someone's going to hear this and they're going to misconstrue what I'm saying, but it's a possibility that there's these let's say, what do you call them, shell company type things. There's these entities that are legal fiction, like any corporation's a legal fiction, that set up to take the other side of the trade.
For sure.
And I wouldn't rule that past, because you have to ask yourself, who wants to take the other side on some of these trades? I mean, you have to be an idiot. And yet, there's always a match. There has to be a match in every futures market on any commodity, be it soybeans or cotton or silver or gold. You've got to have a long for every short. And so you think you really want to sell silver when it's down at this level?
Yeah. So these are there's only one entity in existence that knowingly, willingly, and gladly takes on losses. And you know what that entity is just as well as I do. The U.S. government and other governments. Harry Brown used to call them the accommodating loser. They're always happy to lose money for the common good. And when you see a group of entities and you don't know who they are in particular, and they lose money month after month after month, you got to scratch your head and say, who are these idiots? Why are they doing it? Now, they could be buying on the other side, and they could be doing things that you don't know in theory, but at some point the specs have to win, right? And yet they don't. Yeah,
and you're right. I mean, you have to look at every trade to make a statement of, you could find exceptions. I mean, I have a hard time believing that JP Morgan's never lost on any trade. That's a little hard for me to swallow, but, it's possible, I suppose. But certainly they win on the vast majority of them. I have no argument agreeing with that statement.
Yeah.
But you don't even know the net position of JP Morgan. It's like you can see transparently, you can see the Commitment of Traders. But the Commitment of Traders takes in what is publicly disclosed at the CME. What you don't see is what's on the OTC, the over-the-counter market, which is like 3 or 4 times larger. So you could show a net, short position with this small trading house, and yet in the OTC market, they might have 3 times as many long contracts. You just don't know. So
Mhm.
yes, you can derive a great deal from the COT. It's a useful tool. I still use it. It's not as accurate as it used to be, but nonetheless, it's something you need to pay attention to. But if you think you're getting all the information by looking
Mhm.
at that, think again, because you're wrong. You're not.
Hmm. Yeah. Oh, for sure. I mean, yeah, it just can't be. It makes no sense. It's
Well, there's
counterintuitive.
so many. Yeah, I mean,
Yeah.
sorry if I interrupted, but there's so
Okay.
many OTC derivatives out there that are, handwritten. I use that as a metaphor. With, let's say, a silver producer,
Hmm.
and they go to a merchant bank and they write a contract that they're going to sell their silver at X over the next 5 years, or these royalty contracts, which are there are numerous ones, or there's so many things out there that's not in the COT report. It really,
Hmm.
I mean, again, it's useful, but it's not the end all, be all of the silver or gold market. It just isn't.
Yeah, for certain. And I guess we're just going to have to wait. You need to be patient. Insurance policies, you have to be patient. If you buy an insurance policy, you're not expecting it a disaster or whatever reason to cover you tomorrow. It could be years and years. I mean, knock on wood, I have policies that I have never, ever filed a claim on. In fact, most of them, because I guess they would have thrown me out earlier if I had. But then when you need to, finally, it's there and you have it. So I think that's the attitude that you have to take. But in the meantime, David, there are mining companies that are moving ahead, really contrary to the cycle because their underlying business prospects are so positive. We see a lot of companies like that. So it's kind of a bifurcated market, if you will. Some of the companies are going to rise with the tide, and others are really rising against the tide right now.
Well, exactly. I mean, I had a young guy get kind of in my face at the money show. I was there the day before I spoke. I was just in a t-shirt and, whatever. I mean, I was dressed clean, nice, but not, suited up.
Yeah.
And he had his camera out and he said, "Oh, there's David." And I can't control this, and nor do I wish to, but he was really started grinding me. And of course, there were a lot of people around. We were in like the, kind of the entrance to the money show. And you wrong. Well, what he doesn't know, one, he'll never pay me a dime, and that's okay. But wrong on what? The gold market? Well, yeah, maybe. But going back to the insurance thing, I just paid my homeowner's insurance, which where I live is fairly significant.
Yeah.
And that's gone money. That's done. I mean, every time I write that big check, that's for 1 year, and that covers me for that year for the house, and it's done. It's never coming back to me. Well, you might have bought gold at 1900, but you could still sell it for 1280 today. So you haven't lost 100% on your insurance. Whereas for me, on a homeowner's insurance policy, every time I don't collect on it, I'm losing money. And it's okay because I think it's absolutely necessary for me to have it.
Mm-hmm.
So there's that.
Exactly.
So but you can't go into this when a guy's got a camera in your face and he's, And the other part is, as you just said, I want to emphasize this, we've had some pretty good situations over the last few years, making people money and making them money. I mean, look at Kirkland Lake. Get out a chart of Kirkland Lake, which was our number one mid-tier. Take a look at how much money went in that stock over the last couple of years. So here's a guy that's in my face. You're wrong. I really, he's never looked at my work at an in-depth level. Yeah, he's heard me on your show and he's heard me on another show, and I like gold. And I think you should own 10% of your portfolio in it or whatever. And I'm wrong because it's going sideways. This is, to me, a rather amateur situation. And I'm not angry at the guy. And then the stock market's going up, and it's so funny. I have to laugh because I still think that, I'm not sure Bull Pony's right. We're going down next month, June, in a few more days, whatever. But I do believe that we're overextended and we are due for a correction, and it's probably sooner than later. And this kid was saying, we got 2 more years going up in the stock market. And I said, well, maybe the tides will turn, and I'm not going to seek him out. I don't remember really who he is. But, I thought, man, you just made a mistake, buddy. You don't want to tell people, you can tell them direction, but not time, or time, but not direction. But you don't want to do both. Take it from someone that knows. And so he made a statement that, during this somewhat of an interview, you might call it this hostile interview, I'll call it, that stock market is going to go up for 2 more years. I thought, okay, we'll see.
It's amazing that it's been going up the way it's been going up for all these years. I think there's a lot of reasons for it. I think turmoil, obviously, in Western Europe. Actually, the dollar hasn't really gone up for the past year and a half, but it's been in this range. It hasn't gone down. It's been the strongest currency by far of any major currency out there. But, all of the turmoil, plus there's massive debt repayments taking place in U.S. dollars that are coming back onshore. All of that has boosted the strength of the dollar, probably undeservedly, but like we always said, it's the best looking horse in the glue factory, right?
It is, and you're so right. I mean, so many bills have to be paid in dollars or settled in U.S. dollars. I'm a big believer in the extra pyramid, and I do believe there will be a run to gold. It'll be unlike anything in all of recorded financial history. I still hold that belief strongly.
Yeah,
I think that's going to happen within the next 5 years. And I also believe as it starts, the run to safety will be a run to the U.S. dollar as well as gold. So you'll be seeing gold and the dollar both going up. And a lot of pundits will say, I don't understand that. Gold's opposite the dollar, and it's not. It's opposite the stock market, as I keep saying.
Yeah.
And so then as this continues, the people that are looking at dollars as safe start to rethink that and say, you know what? This thing's losing value, because food prices keep going higher and higher. I'm liquid. I'm out of the market. I took a haircut, but not too bad. I was smart to get out early, blah, 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 blah. But I'm holding these dollars, and they're losing value. So then when that next level takes place, those dollar holders that thought they were safe for a while, a week, a month, 6 months, a year, who knows if we'll go that long. I doubt it'll go that long, but it could. Say, aha, I need to get into gold. Boy, that's when the run to gold really starts. And once that psychology starts, look out. There's a lot of dollars versus how much gold is out there. And if you want to really think about it, think of how little silver is out there compared to all those dollars. So I still think silver will outperform gold, but I'm pretty convinced at this point gold's going to have to lead the way. Yeah, and it will.
I think you're right. And it has been leading the way. You just look at it, because let's face it, the market for silver is just totally moribund, and that's in the face of rising consumption too on the industrial side.
Yeah, I mean the industrial side just keeps chugging along higher and higher. I mean more and more, no matter recession, whatever, stagflation, inflation, deflation, whatever you want to name it.
Yeah,
the industrial side of silver basically keeps going higher. Yeah, it ebbs and flows, but the trend's pretty clear.
And it's going to go higher and higher.
That's to go higher again in this year, 2019, regardless of, trade war and everything else. I mean, there's so many uses for silver, and we don't have to go through them. But
we know that the garbage dumps are full of all those old uses. The other thing we didn't talk about, base metals. Obviously, silver, for the most part, is a byproduct of copper, zinc, etc. And, I know a few huge mega copper projects on the board, which will yield a lot of silver, but there just really aren't that many. So there's no future. There's very few, as you've said many times, very few pure silver mines around, pure silver companies. They just don't really exist. There's only a few of them. So it all comes from byproducts. Those companies don't care about silver. Only what they like about silver is the optionality that they can use their silver proceeds and gold proceeds. They can sell them into the future market and use that to finance their mine. But otherwise, they don't really care about this stuff. So
they don't.
Yeah, they really don't. It's totally the tail wagging the dog. So for all those reasons, at some point in the future, we know what's going to happen. We just have no idea when. But, hey, David, so Morgan Report, what's the deal on the Morgan Report these days? How do we get it?
Well, just go over to themorganreport.com. We put up something new on the landing page. Let me check as we're speaking. I'm on my computer, as you know. And my webmaster and I decided to, there we go. Yeah, so if you haven't been to the website in a while because you're already on the free email list, I suggest that you go back to themorganreport.com and sign up for our free letter. You certainly are welcome to become a member. We certainly want our membership, but we've put up on the front page a new display about this electronic waste, this e-waste company that I'm so high on. I've been at this over 40 years, as you know, Kerry, and this is, I think, one of the best speculations I've seen since I've been doing this. And people really ought to consider getting a subscription. Of course, it's up to them. I mean, I want to go back and digress one more time and we can close out the show. But
sure.
If you go back, remember the NIA, National Inflation Association?
Of course. Yeah. How could I forget that?
Yeah. And they
who was in it? Weiss. Weiss. Right?
I don't think it was Weiss, but they had, I think Gerald was one of their head guys. And
yeah.
Anyway, they did some of the best videos and they gave out some really great information, and it was all free for quite some time. And they built a huge following. And of course, this was during the heyday of the metals. Gold went up 11 consecutive years. So they built their mailing list. Well, when things were really hot, and I have to, give kudos to these guys for their savvy. What they would do after they got this huge free list is they would put out a mailing to this mass amount of people that were on their list and say, hey, we've got this great XYZ mining company, and it's only going to cost you $1,000 to get the name of this one company. And they were selling it like crazy. So that shows you the difference between like a hot market. And by the way, every one of those was moose pasture. None of them were good.
Yeah, well,
regardless of that, it was a hot market. People bought it, gladly paid $1,000 for one stock pick. Now you've got my expertise with my staff. I mean, it's just me, and we
have your integrity.
Quite some time. It's $500 for the year, and you get a lot more than just one pick, and on and on. And we can, we're losing business.
And and I personally want to say we have your integrity, which in a business where there's a lot of, shall we just say, questionable practices. The one thing I know about you, having been in this 8 years now, David, is you're my go-to person. If there's somebody I want to know about or something, I go to you because I know that that your integrity is unquestioned, and you never mention a company that you don't really believe in their future, in their prospects. So that's to be applauded and commended because, morality is in scarce supply these days, let's face it. So I know that from the Morgan Report, I'm always going to get unvarnished truth, and you're not going to be promoting things because somebody slipped you a couple of dollars under the table. That would never happen. So we really appreciate that a lot.